Hey guys, welcome to episode 6 of this series. Obviously, this one we are on about attracting investors. Very important part of obviously running a fund, and therefore this series, and obviously by the end of this video, you are going to learn those key intricacies of how to attract those investors from UAE, US, EU, XYZ. Okay, so welcome obviously back to the hedge fund series, and again, it's not just about hedge fund performance, which most people actually think. It's actually about the structure, the credibility, and the process of actually the operations of the hedge fund. So starting off here, we're going to be building the investor trust. Again, basically that is a well transparent and well designed, looking very professional, and that's obviously very detailed as well, so the investor can explain the private placement document, which is a PPM. I've mentioned it before in other videos. Please go and check them out if you haven't done already. And again, if you did actually want banking for a trust to actually one-on-one, a little bit of a consultation of how to set up a trust, or for us to actually do it all for you, obviously we can go ahead and book a meeting. There's a link down below. You can go ahead and do that. But essentially, credible management, experienced management with that track record is going to bring that investor trust as well, alongside those third-party providers such as the administrator and the auditors as well. Again, having that clear strategy in line with a PPM, transparency to the investors, is going to give that investor trust, and obviously declaring those risks and being very honest with investors and keeping communication on point is also very key. Standard points to say, but I just thought we have to make a slideshow on this because it's all part about running an actual hedge fund. So moving on to the next slide, we're looking at accredited and qualified investors. So essentially here, let's actually talk about who you're allowed to raise capital from. Interesting topic. You might think you can take capital from everywhere. No, you cannot. There are regulations. So going into the United States, you're typically limited to accredited investors. This is under SEC regulation in Section D. And this includes high net worth individuals, institutions, or entities with over 5 million in assets. So for those traditional US clients, if you're not using a Delaware feeder, for example, you can only onboard those US investors who have 5 million in net assets, who are classified as high net worth individuals or companies with obviously about 5 million. So essentially, it's your due diligence and part of your fund to make sure the investors do meet those actual requirements. If not, you will be breaking those laws of the actual funds, XYZ. And again, collecting self-certification forms and legal declarations is going to be key. Fund admin can sometimes help with this with the onboarding process. When they're going through the KYC, the same forms are usually sent out, okay? So these clarifications, again, are more than formality. They protect you from regulatory breaches and future investor disputes or court cases as well. So great for the asset protection front as well, making sure those compliance documents are all done. Moving on to marketing your fund again, very simple stuff. When we look at this, again, marketing a Cayman Hedge fund must follow the regulation and the actual PPM of private placement memorandum articles, rules and regulations that you set out by the legal counsel in that original BVI and Cayman documents, okay? So this means that there's no public solicitation, there's no advertising, social media promotions, or mass mailing. You cannot be mass emailing, social media promoting, or advertising as that one right there. You need to create a very clean, compliant pitch deck that explains the fund structure, the investment strategy, the risk disclosures, historical or back-tested performance that's clearly marked to the investor who's looking at investing in your fund. And again, use those fact sheets or one pages tailored to the investor types, whether it's a high net worth individual, a family office, or a simple company, a holding group that wants to place some investments with you. So your website can exist even to showcase your team, fund philosophy and service providers. But again, it must not offer subscriptions directly or list performance unless fully qualified with disclaimers. So as you can see, it's a bit of a grey area between marketing, when I explain it like that. It's very black and white, but it's super simple as long as you've been advised correctly at the end of the day, guys. So moving on to the next chapter, again, a little bit boring, but you need to know this stuff. And the very important topic is subscriptions and redemptions in terms of the terms. So when the PPM obviously gets done, there's a minimum subscription amount, typically looking at 100K. This is the standard for SEMA which is the Cayman Islands Monetary Authority, if you weren't already aware. And essentially, there's lockup periods. So lockup periods and notice terms, is it a 1 year minimum, 3 month minimum, 6 year minimum, XYZ? You've got redemption notices. Maybe you need 60 days notice, 90 days actual notice on withdrawing those funds. Whether you use gates, suspensions, or redemption fees, there's many different mechanisms you can actually jump into. Again, that's why you should be looking at booking a call with a legal advisor or someone such as myself who has a little bit of knowledge in this aspect of the world. So again, you might want to look at how your performance fees are calculated, e.g., 220 with high watermark. It really depends on how you're running this fund. And additionally, finally speaking, how and when you calculate the net asset value. And this is what is called NAV. That is the NAV calculation. Obviously, again, an interesting section. It's hard to kind of envision without seeing these platforms in front of you. I completely understand that. As for me, myself, I can picture those and envision those platforms. So again, maybe I can create a future video on actual fund admin itself and, different niches of what I've gone over in this video. But essentially, in terms of the investor onboarding process, again, we're looking, a situation where once someone commits to invest, this is the onboarding process. Number one, again, sign the subscription agreement. Number two, submit KYC documents and the investor declaration. Number three, AML review and administrator approval. Number four, issue shares and send confirmation of investment. Simple stuff. Everything must flow through the fund admin. Again, third party, been through them before in other videos, touch base. They are the gatekeeper to compliance and the investor records, okay? So this this protects you legally and shows investors you take governance very seriously. And again, comes back into the trust as well, into marketing your trust. So to close up this actual video here for episode 6, again, to attract capital, you need to have more than a good strategy, right? You need to have structure, substance, and compliance is exactly what I said at the start of the video. And now you probably understand why I'm saying this. These are all the little intricacies that allow the fund to flow freely, sustainably and effectively, to make sure you're managing it in best interests to obviously keep the fund going, make sure it's the best business it can be, right? So again, build investor trust, know exactly who you can onboard, keep the marketing clean, compliant, and very compelling, and ensure onboarding is smooth, secure, and very well documented. So that's it, guys. I'm excited to see you in episode 7 because, to be honest, that episode was pretty boring, pretty basic stuff, but it's some good stuff to touch base on so everyone does kind of understand where we are currently at with setting up these funds in this series. And obviously episode 7 will get back into the more complex stuff, which is much more fun and interesting to understand, as everyone understands this anyway. It's just putting it in a systematical process and a systematical order so that clients understand how the fund administration actually takes place in terms of the investor onboarding process and the client experience, being a client investing into the fund, XYZ. So other than that, guys, I'll see you in the next one and hopefully hear from you soon.